This conference will now be recorded.
Hey, everybody, welcome to the Safe Space Podcast with Tammy D. I'm here today with Mark, buy me a vowel, Murky, Mrky. Somebody left the vowel out of that last name. And
True.
we're going to talk about something that some of you may not be aware of, or you might have heard it, or even, I'm always surprised, Mark, that even financial guys that have been in business for a long time don't really know much about life settlements, or they get it confused with viaticals, and they kind of shy away because they don't really know a ton about this very interesting subject. But so we're going to kind of do this from the consumer's standpoint, and I'm going to have Mark
hmm
introduce himself, tell people a little bit about your background and how on earth you came to be a specialist in life settlements, and then we're going to explore why life settlements might be something good for people that are experiencing a little financial turmoil right now. So,
Sure,
welcome to
sure.
the show, Mark Mrky, live from Florida.
Yeah, well, thank you very much, Tammy. I always appreciate the opportunity to talk to people about our industry. Like Tammy said, it's an industry that a lot of folks just don't know about. We are a very young industry. I've been involved in the life settlement brokerage spaces, which is what my firm is. We're a life settlement broker. We represent sellers who want to sell their policy, and we market it to all the buyers that exist in the life settlement industry, which there are dozens. And I got started about 21 years ago. And I got started because really three of my close friends, they were in this business back when it was the viatical settlement days, which back then you had a whole different client base. You had folks that were afflicted with AIDS and HIV that were selling their policies to help them with medical care and medical costs. Well, the advent of protease inhibitors and some medical breakthroughs kind of helped those individuals, and they didn't need to sell their policy to take care of medical expenses. So what did the industry do? It shifted. It shifted from what we knew as viatical settlements, which a viatical settlement simply is if you sell your policy and you have a life expectancy under 24 months, it's called a viatical settlement. Well, the industry shifted. It said, well, wait a second, we can do this for individuals that are older, people that are 65 and older who may have a life expectancy of anywhere from 2 to 22 years. Why can't we do it with them? Why can't we buy their policies? So in the mid to late 90s, that's when the shift took place from viatical to life settlements. I got on board in 2000 and really haven't looked back since and been focused on just this. It's all we do, all we've ever done, probably all we will ever do is be a life settlement broker and representing there's about 500,000 policies that lapse every year just on seniors alone. My industry
Now
buys.
wait a minute. I want you to really emphasize that, because
Yeah,
what you're saying is, a lot of people buy insurance at different times in their life for different purposes,
correct.
but most of those policies never yield anything. They lapse. People let them go because why?
85% of 85% of universal life policies end up in lapse or surrender. And it's 88% of term, or it might have been vice versa, either or. But bottom line, you got 85 to 88% of all life insurance policies, universal life, convertible term, that's what we look at in the life settlement industry, VUL, survivorships, they end up in lapse or surrender. Well, why? Well, the same reasons people take out insurance to cover their family, to cover their business, to cover their estate taxes, to cover loved ones, whatever it may be, those same reasons exist for why you would sell your policy. Your kids grow up, they're off, they're doing great. Maybe you don't need life insurance to cover them or cover you should you pass away. Maybe your estate tax coverage isn't needed. The estate tax exemption has changed again. Maybe you don't need as much insurance. And that's what people use insurance for a lot of time for their estate taxes, is to cover estate tax, excuse me. So the very reasons why you buy insurance, key man, you bought a business and you want to cover yourself as a key man and now you sell your business. Those reasons exist for why you don't need your insurance anymore. And a lot of what we see is individuals that just have simply used their insurance. It's been good to them. It's worked for 5, 10, 15, 20 years. And all of a sudden they decide, I just don't need it anymore. So what's my alternative? And unfortunately, the only alternative go back, 25 years ago was to surrender back to the insurance carrier. And whatever they said the value was, that's what you took. That doesn't exist anymore. And now you have dozens of institutional buyers, hedge funds, pension funds, accredited investment firms, family offices that have said, wait a second, we like this space. We'll buy those policies. And in most instances in my industry, when we take a client on, we get them anywhere from 4 to 7 times their cash surrender value. So that's kind of
Wow,
the how and
that's a big
why.
difference. Well, I mean, people, I guess the better question would be for me to ask, do people just don't know this exists? Is that why they let their policies lapse? What's going on when you just let your policy go? Because it doesn't make sense if this
Lack of
is
education.
available. Yeah.
100% lack of education, and the answers are varied and why. I mean, I mentioned, and you had asked, wait a second, Mark, you said how many, the number is 500,000 policies end up in lapse or surrender every year on seniors 65 and older. That's just seniors alone. 500,000 policies lapse. My industry, as of 2021, the latest numbers, we bought, I think, 3,300 policies. So our industry bought 3,000 policies, but there's 500,000 that lapsed or were surrendered. And it really comes down to lack of education. Most clients don't know that when all of a sudden your need for insurance has gone away, what do? You're trained to go back to the carrier or your insurance agent, if he or she is even around, and say, oh, I don't need my policy. We've invested in this UL for all these years. What's my cash surrender? And the insurance agent tells you. And sometimes that's a good number, especially if it's a whole life product. And sometimes if you funded universal life correctly, your cash surrender value might be quite nice. But too often that cash surrender value isn't nice. You've paid in 100 grand and your cash surrender is 50, and no one tells you, well, guess what? You can go out to the life settlement industry and have your policy appraised for free. Our appraisal costs nothing to do. We collect medical records, life expectancy reports, policy illustrations, put that information in front of buyers, and a bidding scenario takes place, just like selling your home. You go to a realtor and you tell the realtor, line up every single buyer you can find and get me the highest bid. Same exists in a life settlement transaction. We put the client's policy in front of all the providers, they're called institutional capital, and they look and say, okay, well, based on our inspected internal rate of return we want to make, based on our life expectancy estimates, which I call them guesstimates, here's what we'll pay for your policy. So my industry is very similar to any other asset you own. When you no longer have the need for that asset, what do? You put it out on the open market. Well, guess what? That now exists for your life insurance policy. And many times a life settlement appraisal will come back, as I mentioned, anywhere from 3 to 7 times what the insurance carrier's cash surrender value might be, or in the case of a convertible term, which we all know is worth zero, if you let that policy go, my industry still buys those policies all day long.
I was going to ask you about that. I mean, you mentioned permanent life like index universal life and whole life. What kinds of permanent policies? I mean, people have lots of those. I mean, and they forget about them too. You buy it when you're really young, and then you put it in a drawer somewhere and you forget you even have it. So what can you
Mm-hmm.
do with those things?
Yeah, I mean, my industry, I would say 70% of the policies sold in a life settlement are going to be universal life policies. They're policies that the client has paid for. Maybe they hadn't paid enough over the years. Their cash surrender value is dwindling. It has not performed to expectations. And the client says, what's my best alternative? Well, a lot of times we are. Now, when you look at whole life policies, which in my opinion are great policies, if you fund a whole life policy correctly and you pay what the carrier says you're supposed to pay, they're usually going to grow at a 4% interest rate. You're going to have a return. You're going to have a nice build up return in that whole life policy. Can they be sold in a life settlement? Yeah. But keep in mind, a life settlement buyer has to beat your cash surrender value. So most of what we see is universal life policies at a very low cash surrender, survivorship universal life, again, low cash surrender. We still see whole life policies, and those are tougher. And I have to explain to the client that, maybe your health won't be that good for us to beat that cash surrender. But I've seen a lot of great instances where we've been able to sell a whole life policy. So really, any and all types of life insurance can fit for a life settlement, whether it be a universal life, a survivorship, a variable, whole life, and then you look at convertible term, probably in that order. In fact, I put convertible term right behind universal life, but that's kind of what my industry looks for. Any type of insurance, permanent, convertible term, potentially you're a fit for a life settlement.
So let's talk about like the ideal client or the ideal person for this kind of thing, like what we're looking at, age and all of that other stuff, and
Hmm.
also the process that that person is going to go through in order to get this done.
Sure. Yeah. Ideal client, and I tell folks to put yourself in the buyer's perspective. Your ideal client is going to be older, over the age of 65, and I usually even say over the age of 70, with some health decline. And here's where the biggest misconception about my industry lies: is most people say, "Oh, viatical or life settlement." I don't have those type of clients who are on their deathbed. Well, good, because that's not my industry. My industry buys healthy insureds in the early 70s, mid 70s, late 70s, whatever it may be. So we can buy policies on individuals that are 65 all the way up to 95 years old. The ideal client will again have some change in health since that policy was originally issued. Again, they don't have to be death, die, anything like that. Some change in health works. And then you simply look at the premiums on the policy. That's what the buyer is going to look at. They're going to assess a mortality rating. That's a life expectancy. And I know that seems morbid maybe in some people's eyes, but that's what my industry does. We do collect a client's medical records. They don't have to go to the doctor. They don't have to take any medical visits or like that. We look at their past medical records to assess a mortality rating and or life expectancy. And then we look at the cost of the insurance going forward. So the ideal client is someone's in their late 70s, early 80s, maybe has some health decline, owns a universal life policy that's at least 100 grand in death benefit or more. That is key. And that's kind of the client we look for. The average in the settlement industry is usually $1 million to $2 million policy on an individual that's in their late 70s. And then the average payout, which is super important, the average payout as of last year was 19.8%. That means if you own $1 million policy, you almost got about 200 grand for the sale of your policy.
And that
That all
could,
make
I
sense,
mean,
Tammy?
it does. And I could see, as somebody with a background in the financial services and insurance world, I could see where you could leverage this to help your clients who are have a shortfall of retirement money, right? I mean, you could use this to put them in a better product, a better policy, one that doesn't have problems with its internal, like the cost of insurance and things that start to eat away. Or you could take that money and use it to fund a trust or something like a legacy fund. There's a
You
lot of
could,
things that
and
people.
yeah, and I'll say something there because my industry has been doing this long enough. There used to be an arbitrage that way back when you could sell your old policy and go and fund a new one. Now, honestly, that does not exist so much anymore in the life settlement industry or the life insurance industry. If you're a candidate to sell your policy and get whatever offer it is, whether I'm giving you 5% of the death benefit or 55%, you're probably not a good fit to go out and get new insurance. That is a caveat I tell folks, and it's important for financial advisors to know that if you were a consumer, is if you sell your policy, you're probably not going to be a good fit to go out and get a new one. So make sure that your policy no longer meets your needs. Make sure you looked at every alternative. Maybe your kids want to keep it in force or whoever it is. And if the answer is no, I don't need it, want or can afford it, absolutely look into selling your policy. And the money that's created from a life settlement, that's yours. You can do anything you want with it. And a lot of the clients I talk to, they do reinvest it. A lot of them have put it into an annuity. Whatever fits your needs, you can take that money and reinvest it into anything that you like.
And I think that's important for people to know too, that you're not, you do need insurance. Most people do. And you need to make sure you sit with an advisor before you decide to do this because you don't want to get rid of coverage that you're going to need. That being said, there are probably a lot of business owners that retire and forget to get rid of those key man policies like you mentioned, and also
Yeah,
some buy sell agreement insurance that
absolutely.
they bought. And
Absolutely.
I,
Yeah.
I would think if you're an advisor and you have business clients, that's a place that you should definitely look, is for people.
No, no question. And a lot of those clients might own term policies. Maybe they bought a term and took over a business when they're in their 40s and it's a 20-year term and now they're in their 60s. They don't need the policy. Yeah, those are great clients just to reach out to and simply say, hey, are you familiar with what a life settlement is? Are you familiar you can appraise this asset, which is your life insurance, for free? And that appraisal might come back that's significantly higher than what your cash surrender value is. And yes, if you need your insurance, no, don't look into my industry. If you still have a need for insurance, still need to cover your family, hold on to your insurance policy. But if you're like those 500,000 individuals that let their policies lapse or surrender every year, then you absolutely, if you're not looking into my industry, you overlook something very huge potentially. And if you're a financial advisor that's handcuffed, and I say this and it just frustrates the you know what out of me, but a lot of advisors are frustrated, or not frustrated, are handcuffed, I should say. And I won't even mention the broker dealers, the carriers that do not allow their advisors to mention this option. Kind of crazy. You take that fiduciary oath, says, hey, I'll act on the best interest of my clients. Yet if my client comes to me and says, I don't need my policy, oh, I can't tell them about a life settlement. Frustrates me to no end. And it's because of lack of education. There's broker dealers out there, there's insurance carriers that simply don't understand my industry, to where if a client has absolutely looked at all the alternatives and says, I don't need my policy, I can't afford it, I don't want it, what can I do? If you're not mentioning this, you did your client a disservice. And there's lawsuits out there. I wish there were more. I really do, because I think every insurance carrier, every broker dealer needs to make sure they understand my industry, and they need to partner with a life settlement broker or several providers or whatever it is, so they can give their client this option.
Exactly, and it may become part of the fiduciary standard of care in the near future. We can always hope for that.
Yeah.
Now, I unfortunately I only have the half hour today. This is actually an interesting subject, and this is in these trying, turbulent times when people are looking for more money, they're looking for
Mm-hmm.
what can they sell. They're looking at selling their boats or their RVs or whatever. If you're in a situation where you're looking at selling some assets off, you might check around and see if you have an old policy that you just forgot about or don't need, or as Mark said, this is something that you bought when you had a business, but you don't have a business anymore.
Mm-hmm.
And call, how does, first of all, how does the public get in touch with you? Like, do they have to go through a financial advisor, or can they come
No,
straight to you?
absolutely not. 20% of our business is consumer direct. Absolutely. When an advisor gets involved, he's just bringing the case to me just like the consumer would. And then he's taking a commission on the deal, which is, fine. That's between him and his client. But no, a consumer can call my firm direct, go to my website, www.lisettlements.com, call my cell phone direct, which I'm happy to give anybody that number. And we will absolutely, number one, educate them about a life settlement, show them and talk to them about the process, which is about a 4 to 6 week period to get your policy appraised. And then an offer is delivered to you. And at that time, if you like the offer, you decide to sell your policy for whatever the offer is, and then a contract sent to you. But if you don't like the offer, that's okay too. It's what we do is a free, non-binding appraisal of your policy. And if you like the appraisal, you'll sell it. And if you don't, you can tuck the number away in a year or two or three when you decide, all right, now I'm not sure I need my insurance anymore. You can pick up the phone and call a group like me, which again we work for the client. We make sure all the buyers in the life settlement arena, which again, there's dozens of them, we make sure they get a fair chance to look at our client's policy, price the client's policy, and then he who comes to us with the highest offer wins. And that's the offer we report to our client, which is usually it is through a financial advisor, but a lot of times, yeah, we deal with consumers directly, and that's just fine.
It's perfect. So if you're an investor, do you have any suggestions for people that want to invest in these? Because I know that's going to come up as a topic at some point. Can you direct them to the right place if they want to buy one of these?
Here's what I say: buyer beware. My industry, and I know my industry inside and out, and I don't invest into it. You know why? It's because to really see the internal rate of return you want, you really need to spread your risk amongst multiple policies. If you're expecting to buy one policy and make your 14% return, you're gambling, because the client may live longer. And if they live longer than a couple of years based on your life expectancy estimate, you start to dwindle on your investment. So I don't get involved in the investment side. Do I have some people that I trust in this industry that I introduce advisors to, or high net worth clients? Yes, I don't have a problem doing that, but it's not my area that I get involved in. But
Perfect.
yes, I can make some referrals. Yeah.
Because people are going to want to get in on any kind of alternative investments now. The way things are, it's kind of insane
And my
out there.
market and my market is booming. So there's 3 or 4 groups that I do trust well enough to say, hey, if you have, and again, it's a business that you've got to come to the table with some pretty deep pockets at times, 6 figures, 7 figures to invest into the purchase of these policies through fractionalized interest or whatever it may be. But there's some good groups out there. Absolutely. We know them. Yes.
Okay, perfect. And Mark, thank you so much, because this is a topic that a lot of people, as you said, don't know much about. I didn't even know that you could, for example, been in the industry for years, didn't know you could sell sometimes a term life policy, for example. So Mark Mrky's here, and he's available to financial advisors that want to partner with him and offer this service to their clients, which I think it can be a lifesaver to some of your clients. It can really get them out of a bind, especially if they have medical problems or expenses that they weren't anticipating. And also, it can give you a chance to sit down with them again and talk to them about something new and different, and take a deeper look at what's happening in their lives financially. So it's a great. I've always liked this product ever since I met Mark, because I think he's one of the good guys out there doing this. He's been consistent, and everybody I've sent to him over the years has at least reported back that he's okay. He's not difficult to work. He's not
That's good.
difficult to work with. He's not difficult to get a hold of or anything else. So there's the number up there. I think it's at 866-568-7773, whether you're a consumer looking to sell or you are an advisor that wants to work with Mark to make this part of your holistic approach to finances. Thanks so much for being on the program. We will talk again, Mark, about initiatives to get you back on the radar of my people. So
Sure. Tammy,
so
you gave a
anyway,
number. You gave a number that I'm not
oh,
quite familiar with,
oh,
but
sorry.
it's okay. Our cell number, my cell number, which people know you can reach me from 7 in the morning until 10 at night. It doesn't matter. But my cell, if that's okay to give, Tammy,
Yes.
954-326-9378. And if you
And we're
do
going to
call
put
me,
it in the show notes too. So I'll
okay,
do
yeah. And
that.
if you do call me, make sure you tell me, hey, I listened to your Tammy DeLu presentation, because that helps me out. And yeah, always happy to help anyone
Well,
navigate through the settlement process.
we're going to get you more than slightly famous. So my guest again was Mark Mrky, talking about life settlements. It's a way that some of you that are having a cash crunch may be able to, get rid of policies that you're not using anymore. And some of you advisors can really help your clients out. So have a great day, Mark. And we'll talk again later. And thanks for being a guest today.
Very good. Thanks, Tammy.
Take care. Bye.
Bye now.